I just want to start off by exploring the decision by Facebook owner Meta to scrap its agreement with Australian media publishers to pay for content it commercialises on its site. Meta says it will close its Facebook News tab because of a sharp audience fall. So where do those people get their news from? Well, News Corp CEO Michael Miller today quoted a Reuters Institute report claiming that up to 40% of Australians do indeed use Facebook for their news. There's a great story, though, in the Financial Review today by its media reporter Sam Buckingham-Jones, which is a detailed report about the content sharing agreement between Facebook and the 10 network. Now, it shows 10 would be paid a minimum $2.75 million by Meta, owned Facebook for 3 years. Now, once Facebook made the $2.75 million, 10 would then earn 55% of any additional advertising revenue. 10 committed to post a minimum 6,000 video clips a year, sourced mainly from 10 News and also its program, The Project. But another detail in this caught my eye. The 10 contract was not with Facebook Australia Proprietary Limited, rather with Facebook Ireland Limited, which is now called Meta Platforms Ireland Limited. I can confirm also that Sky News has its own separate agreement with Facebook Ireland, due to expire at the end of this month. Most other Australian publishers and broadcasters' contracts end on June 30 this year. So why Ireland? It's the question that politicians, including Assistant Treasurer Stephen Jones, who's leading the inquiry, and the Tax Office should be screaming out right now. The answer is pretty obvious. Ireland's corporate tax rate is 12.5%, much lower than Australia's 30%. But there is one other thing. Under these deals, Facebook Ireland is paying the Australian publishers. So these are expenses, not taxable revenue. So in other words, why do the deal in Ireland unless you're booking the revenue there as well? So the government and the Tax Office need to investigate whether revenue from these deals leaked out of Australia to Ireland. From the Tax Office's Corporate Transparency Report, we get a glimpse of Meta's tax affairs here in Australia. In the 21-22 financial year, Facebook Australia Proprietary Limited had revenue of $1.14 billion, a profit of $100 million, and paid company tax just over $30 million. But the 10 contract begs the question, just how much other billing did Facebook redirect from Australia to its lower taxed Irish subsidiary? The question isn't answered in its own accounts lodged with our corporate regulator ASIC. It's not answered by Meta's US accounts or indeed the accounts of its predominant Irish subsidiary. And we checked them all today. Also, who gave the advice to Meta, Facebook, that it should sign contracts with Australian media companies in Ireland? That should entertain our Senate committee looking at the big accounting firms. Now, my understanding is a key figure in these contracts is this person, Gareth Lamb, the Vice President of International Sales Operations and the Head of Office at Facebook Ireland. He left Facebook in 2022 to become the Chief Executive at Medihive, an Irish healthcare startup. Last year, Facebook Ireland's revenue, €58 million. That's around 96 billion Australian dollars. It's more than 54% of Meta's global revenue in Ireland. Now, Australian politicians, as they seek answers as to why Meta wants to slash its media deals in Australia, should also be finding out just how much tax leaked out of our own tax office. It would make a riveting House of Representatives or Senate Economics Committee hearing. In my view, you'd easily win $100 million or $100 bet on that answer.